All right, everybody, welcome back to the channel. It's Dave and Josh with the Greathouse Team and Remax Above and Beyond. And Josh, our number one video that we did last year, the most views, the most comments, the most questions was why is Cleveland a great market to invest in real estate?
Yeah, and that's why we decided to make this follow-up video, kind of get you in tune to what you can actually expect if you are investing the good, the bad, the ugly in the Cleveland market for 2023.
Yeah, without further ado, let's go. All right, so it seems like everybody and their mother wants to invest in Cleveland, Ohio, right? I don't know if it was from our channel or some of the articles that were written. I know Zillow just ranked us the second, I don't know, hottest real estate market in 2023. So the secret's out. People want to invest here, which leads me to my first topic that you all need to be aware of, and that's competition.
Yeah, the competition is fierce. I mean, you've seen it. We've seen a huge influx of investors, both locally and out of state, who have, like I said, like seen our videos, they've seen the articles, they've gone to biggerpockets.com, they've gone to a seminar, and Cleveland's always thrown in the mix of opportunity zones for investment. Well, we're not in the early stages of that sentiment anymore. So what we are seeing here on a local level is really good investment properties are not staying on the market long. We have agents and local investors and savvy out-of-state investors that have their finances in check. They are not hesitating and they're pulling the trigger on these rather quickly. So we really need to, if you're looking to invest in this, you develop a strategy, take that strategy and be prepared to move quickly while still doing your due diligence. And there's a lot of factors in that, but don't expect to be able to sit here and calculate a deal for a week or two and think that you're not going to get the rug pulled out from underneath you, because frankly, it's just not the case anymore, Dave.
I mean, listen, we're just two agents. We get probably a couple phone calls a week from out-of-state investors looking to buy property here. And what we tell people now, and we'll tell you the same thing, is you need to be ready to go, right? And I mean financially. So figure out what you're going to be doing, whether it's lending. I know some of you are talking about DSCR loans. All of that stuff is doable, but have that figured out before we start looking at properties, because it doesn't make sense for us to go tour a ton of properties if we're not ready to make a move on it. Because like Josh said, it will be gone if it's a good property.
Yeah.
All right, so to follow up on our last topic or our last piece there, I just want to tell you a little story. I had a call from an investor, potential investor, last week that said they wanted to spend less than $100,000. They wanted at least 15% cash on cash return, and they wanted it to be in an A-plus neighborhood. And I said,
Yeah.
well,
Sign
sign me up for that too. You're chasing unicorns. That doesn't exist here. So I wanted to ask you and talk to you a little bit about the expectations, right, from a purchase price standpoint and sort of the strategies, maybe less than 100,000, maybe your first time home buyers or investors under 100,000, and those maybe seasoned that are a little bit higher price point.
Yeah. Look, I will not judge anybody looking to get into the investment game, especially here in Cleveland, with $100,000 budget. That certainly is absolutely realistic here. Your expectations have to mimic what real life gives you here. And really what that does is I think you have to look at Cleveland, and there's a ton of intricacies, but you can't have all of that. And there are people out there I know that will tell you, well, I got it, I found it. Well, that's great. That's always going to be the case, but they are few and far between. So looking at your budget and saying, hey, look, I think with $100,000 budget, look, the reality is you're not going to get an A or a B grade type of location. That doesn't mean you're not going to buy a home that's not in a promising area where we could see some dramatic changes over the next 10, 20, 30 years, I think there's a ton of growth opportunity in Cleveland in some areas that have been frankly neglected. And that's where that, risk reward potential lottery ticket of purchasing in an area that doesn't look great now, doesn't get the grades now, but over time could really turn into something. I don't scoff at looking at those opportunities, but to get that full total package and to get it now is simply creating really, really tough expectations on the front end.
Yeah, and that's the thing. Like I typically see, again, two almost buckets right here in Cleveland. You have the C and D neighborhoods, which typically do generate more cash flow, like on a monthly basis. You're probably going to see higher returns because their rents are still really good there. But again, it's not necessarily an area that is, in my opinion, poised for long-term growth, but you never know. Versus the folks that are maybe paying a little bit higher, buying in some of those A and B neighborhoods that are sacrificing the short-term cash on cash flow every month for longer-term returns in appreciation and equity. Would you agree?
Yeah, absolutely. I mean, from just the last, from generalizing maybe the last 6 months here, really since rates started to take a turn and we saw like a slight shift, just using that as an example here, I think like those A and B neighborhoods are still really hot.
Yeah.
They're still really hot, and I'll generalize numbers, but double digit cash on cash return, like if that's you're a cash on cash, like that's your Bible in those prestigious areas here is simply really, really, really challenging to get.
Yeah.
I think you'd agree with this. Like if we're in the 7 to 9% range on a good structurally sound home in those neighborhoods, you're doing what is expected in this market.
Yeah.
And then on the flip side of that, your C minuses, your D's, even your F's, what I see is the cash flow opportunities are through the roof. Yeah, it comes with its own level of risk.
Yeah.
You're looking at it from a different lens. So you're probably seeing properties that may have been a little bit neglected or a lot of it neglected. A higher project maybe initially. Now again, I'm even seeing some of these properties that are renovated, just the location isn't great. And the cash flow's nutso. I mean, it's fantastic. And you can go Section 8 versus standard and all of those intricacies. There's a ton of great cash flow opportunities in some of our lower graded areas. And if you're willing to absorb that risk, maintain that property in the way it should, vet your tenants appropriately, tons of opportunity at that lower price point.
All right, so another thing that you should expect is that you're going to be buying an older house. Most of our houses here in Cleveland are old. It's not uncommon to find houses built 1900, 1910. So a lot of houses you might be seeing are pushing 100 or maybe even over 100 years old. And one of the things that we hear from our investors, especially out-of-state folks that don't have basements and things of that nature where they live, is they're so surprised to see all these things on these inspection reports. Like, oh my gosh, how am I going to deal with this? Specifically, moisture in basements and old knob and tube wiring. We see this every time.
Yeah, it's funny how the excitement level of even a newer investor, mostly newer investor, they get when they get locked into that first deal. We do due diligence, we get the inspection, and we get a report that's like 59 pages long because literally every inspection report is 59 pages long at this point. And we love our inspectors and we know you've got to cover your butts here. We get it. We always encourage folks in most every scenario to get an inspection. But what we don't want you to do is to think you're getting a brand new home. Think that these places you're buying aren't going to have issues that need to be addressed. Owning a property, whether it's an owner-occupied or an investment property, requires consistent attention. And unfortunately, not a lot of people do what they're supposed to keep up with those things. And in particular, homes with tenants, right? Tenants don't take care of things like they maybe would if it were their home. So one thing to really keep in mind here is you're buying an investment property. You're really looking at the major stuff, right? Foundational and structural issues certainly have a lot of weight when it comes to capital cost and risk. And we tend to avoid those. I know as an investor, I avoid those unless it's just too good of a deal to pass up where investing that capital makes sense. The moisture in the basements, our basements, problem, right?
100% of houses here have moisture in the basements. Let's just face it.
Yeah. If you don't own a dehumidifier here in Cleveland and you have a basement, your walls are gonna sweat,
Yeah.
right? We have drain tiles that are clay. They're brittle. They're broken. Trees roots grow into them. Um, Really, it's a matter of what are you gonna do in that basement? What's your long-term plan for it? And are you doing all of the things to make sure that that basement is going to stay as dry as long as possible? Are you grading it appropriately? Is the
Correct.
topography making sense? Are your gutters and your downspouts clear of debris and functioning as they should? Are you getting your drain tile scoped every 3 to 5 years? Are you doing the things to mitigate what potential problems could be in that basement? You might not need it waterproofed if you're getting water in the basement simply because you have a downspout pouring water at the
Correct.
foundation. That foundation's 100 years old.
Yeah.
So knowing and understanding that and being realistic with what your expectations are certainly help sort of get rid of some of the queasies and that uneasiness. Knowing that you're going to have to invest in that property
Yeah.
throughout its lifeline is only going to help you in the long run.
Yeah, so you can expect at your inspection that there's going to be things pop up, right? You're going to hear a lot about, oh man, there's moisture in the basement walls. Guess what? It's totally normal. Old knob and tube wiring, totally normal. You will rent those places out with no problem with those issues in them. So I just had one recently where the house, we had the inspection and the roof was older. It was totally fine. There were no leaks, no nothing. And the investor said, well, I want them to give me a credit for a new roof. They're not going to. The roof is fine. It's just older, right? So these are just typical things you need to plan for down the road. And that's what you're going to find out on these inspections, right? You're going to be able to then budget for those capital expenditures down the road. Hey, maybe the furnace is pushing 20 years. I need to figure out, I'll be getting a new furnace in the next 5 to 10. That's what that inspection is for. It's not so that you can say, okay, I want a $20,000 price reduction because I found out there's moisture in the walls in the basement.
Yeah. We, from a service standpoint, we'll conduct an investigation or a showing on that place, however much we can get in, right? We'll do the video tour. And in there, we're always giving you our opinion or assessment on ages and condition of the major items, right? I can look from the street and I can pretty much tell you within a 5 year uh, range of how old that roof is, and we can easily look inside and see
Yeah.
what if there are any existing issues. So we're going to do our part to present you those on the front end so you can make your offer with those things in mind. But my biggest frustration is when we do that, we get an inspection, and the inspector says exactly what we said, and now all of a sudden you want to go back and ask for a new roof for $20,000. And in our mind, we're thinking, we had this conversation, and if it's not broke, they're not going to pay to fix it.
Yeah.
And now you've spent, $800 or $1,000, 400, whatever it is, on that inspection, which you don't get back if the contract terminates, right? Perhaps you've already paid for your appraisal if you're financing it. Now all of a sudden you're 1,500 in and no home to return for it simply because your expectations are not met, and you're trying to leverage something that just frankly doesn't make a lot of sense, especially in these market conditions that far in the process. Sellers are savvy to that, and they know they've got an asset
Correct.
that is going to be appealing to the market.
Yeah. We talked briefly on this. Another thing to expect is, especially when you have landlords who necessarily haven't taken great care of these properties, right? They put them up for sale because they know there's a lot of you out there that want to buy it, and they know that they've neglected it somewhat. They also might have tenants already placed in the unit that probably aren't paying market rent, right? This is very, very common to where you see a property on the MLS you love, you reach out to one of us, say, this looks really good, and we tell you, it looks great, but the numbers don't look great now because the tenants aren't paying market rent.
Yeah, I've grown to know this and realize this as I've continued my real estate career here. Is I think a lot of Cleveland landlords never really intended to be.
Yeah.
I think they've acquired the property through estates or passed on through the family, right? Maybe it was the first home they bought for next to nothing, and they've subsequently moved out to the suburbs, and they said, well, I can rent this place out, right? And I can make some money. And they never really took into consideration what that takes to
Yeah.
make that kind of successful and maintain the integrity of that property throughout and make it appealing to the masses. I think that's changing because investors are paying such close attention here. But that's why you'll see, if you look at a lot of these properties, the rents are lower than they should be. We have all the access to the data in the world here to tell you what they should be renting for. It's a huge thing here. But Dave, like, you got to look at a big picture, right? What would you tell your client if you saw that the market rents were below what they should be and their leases were expiring this year, right, in the next 6 months?
Yeah, I'm going to tell that investor, get through the next 6 months with that low rent and then raise their rent up to market. And if they're not willing to do it, you move on from them and find some new tenants.
Yeah.
And that's an easy strategy. And if you think about, you're going to own this house, it's not a short-term investment, right? This is a long-term investment. So maybe you don't get as much cash flow in months 1 through 6, but months 7 through 120, you're making market rent, right? It's a short-term problem. It's an easy solution.
And if you have the stomach to raise those rents, or, hey, look, sometimes the tenant landlord relationship just simply doesn't work. If you don't have the stomach to handle that conversation, I think it's a big problem. People just don't like confrontation. Yeah. They don't like the idea of that. And I get that. Hire a property manager, bite the bullet, let them handle it, right? But if you're investing, you have to be on top of those things. That doesn't mean you have to treat people poorly.
No.
That doesn't mean that, you have to gouge people, but it's not unrealistic to require market value rent anywhere.
It's a business, not a charity.
Yeah.
Right? And that's how you have to treat this. And if you're not willing to have those conversations, like Josh said, hire a property manager, or maybe it's just not the right thing to do. Maybe you're just not meant to be a property or an investor. So the other thing that is another, I think something that a lot of people don't understand is when you find a property on the MLS that has tenants in both sides, a lot of these properties don't do showings.
Yeah.
And so you need to be prepared to make an offer, what we call a curb offer, where Josh or I will drive by that property and give you an idea for what that looks like from the side of the road. Obviously, we're not going into the property, but you make that offer contingent on a home inspection or a showing. But this happens a bit.
It does. It can often be a frustrating and nerve-wracking scenario. I guess we're so accustomed to it that we've built ourselves up to understand what contingencies and due diligence is required to hopefully put your mind at ease. So just a couple examples of kind of how that works. We'll obviously go and drive by the property and take a look and give you an assessment. We're going to give you all the numbers on the front end that we can run realistically. We're engaging that list agent, trying to nitpick as much as we can to get as much information on the front end as we can. But obviously that offer is going to come with an expectation that that price point is based off of a whole lot of nothing butter. And I think that sets the tone for proper negotiation once we start to get through the next phases. So typically we'll write up a purchase agreement with an agreed upon price, the starting point, both parties agree, and then you have addendums covering that first showing, right? The ability to go see the property even before you hire an inspector, which is good to do to save you money, right? Then you hire that inspector. If you feel good about it. And then, there's a lot of creative things that we can do depending upon what information we get from the property manager, the current seller, on whether those tenants are up to date on their rents, their rental history, the payment, all of that stuff. Like, we try to obtain that. But there are certain things that you can do. Work with your agent. We certainly have the bandwidth to do this to protect you, that you can protect that investment and make sure you're making a sound decision.
Yeah. So I know we're building it up like it's a big scary thing, and we're trying to just be realistic with everybody out there that this is still a great place to invest. But in order for it to be successful for you all out there, you need to be prepared. You need to understand that there are competition. There's a ton of competition here in Cleveland for the same properties that you're going after. You need to be open-minded about the age of the home and the issues that come along with that. Be willing to maybe make some offers on properties that don't do showings, and be willing to inherit tenants that aren't necessarily on market rent figures with the expectation that you can get that up to market rent. Anything I'm missing? 'Cause that's pretty good, right?
The one thing that I think everybody who's investing in Cleveland should know about is our lead program.
Yeah, absolutely.
And that's one you can go right to the county website. We have a lead safe initiative here, a collaboration with the Cleveland Clinic and some private funding in there where a ton of our zip codes, really in like the Cleveland proper and surrounding areas, are requiring investment homes specifically to be lead certified. We're kind of right in the thick of that.
Yeah.
From an enforcement standpoint, I just went through it on my investment
Yep.
property. It was relatively easy and smooth. Some of them don't go that way. But you need to understand what that lead certification program is. And that should be a conversation you're having with your realtor about that offer you're making. That can be a huge leverage point for you. But educate yourself on the lead safe program if you're buying in Cleveland. Know it like the back of your hand.
And stay tuned to this channel because we are going to do a video
Definitely.
on that for sure. Also, again, remember, like, there's a ton of great opportunities here. Whether you are under $100,000 and just looking to get started, or you're a seasoned investor, just be realistic with expectations. That's all we're saying. So keep it tuned in right here on this channel. We're going to be doing a ton more about investing in here in Cleveland. All of our information, as usual, will be down in the description box below. You can hit one of us up when you're ready to buy or sell
your great house.